Bloomberg Audio Studios. Podcasts, radio, news.
This is the Closing Bell on the Stock Movers Report. The companies making moves at the close of U.S. trading with Carol Massar, Tim Stenovec, Romaine Bostick, and Scarlet Fu.
S&P 500, Scarlet, fairly broad-based in terms of some of the buying that we saw today. Vonnie, 343 names to the upside in the S&P, and you've got 160 to the downside.
If you look at the map of the S&P 500, you would think it was just all green today. It's not. You can see there's a couple of sectors that are in the red, but it's mostly, the likes of healthcare on earnings, industrials also doing extraordinarily well, and energy having a better day, having had a tough beginning to the week.
All right, guys, as we await for those earnings to cross, Lamb Weston, one of the outperformers in today's session, up about 16%. You know what they do? They make French fries, and investors certainly eating up shares today. It is one of the top gainers. It's actually the top gainer in the S&P 500, surging the most in more than 4 years after it said it would cut 4% of its global workforce, part of a new cost-saving program. And so this company's been going through a few different changes and so on and so forth. So we are seeing certainly investors liking this name. And we got some earnings.
We do. I'm going to just bring up CSX right here as we await the big one, which is Alphabet. This is the railroad company coming in with second quarter revenue that meets analyst estimates, $3.57 billion, just slightly below the anticipated $3.58 billion. As for the earnings per share, 44 cents, which is lower than the 49 cents last year. Operating income for the quarter, $1.28 billion. Analysts were looking for $1.22 billion. And you can see there the shares a little changed at the moment, kind of bouncing around. Was a bit higher. We'll see how it all shakes out. Tim?
Shares of T-Mobile shot higher for a second, then went lower. Now they're higher again, up 2.3% in the after hours. The company sees 2025 postpaid net adds of 6.1 million to 6.4 million. That beats estimates of 5.94 million. The company also sees fiscal year core adjusted EBITDA of $33.3 billion to $33.7 billion. Estimates were for $33.5 billion. So right there. And now we're seeing Alphabet earnings crossing.
We are. And let's start you off with the second quarter revenue of $96.43 billion, I should say, better than expected. $93.97 billion was what analysts were looking for. When you back out the traffic acquisition cost, that is revenue handed over to partners, $81.72 billion, again, higher than the anticipated $79.6 billion. As for the individual business, cloud, revenue there, $13.62 billion, higher than the anticipated $13.14 billion. YouTube ads revenue, $9.8 billion, again, better than the anticipated $9.56 billion as well. Ad revenue, which is, of course, the biggest part of the business, $71.34 billion. Analysts were looking for $69.71 billion as well. As for search and other revenue, $54.19 billion. Analysts were anticipating just under $53 million. You're looking at shares, little change to slightly higher in the after hours. CapEx is another big one, $22.45 billion. Analysts were looking for $18.24 billion. And Alphabet is increasing its investment in CapEx for this full year, Carol and Tim, to about $85 billion. And again, you wonder how much this sets the tone, sets the bar for how much the other Mag 7 names increase their CapEx.
Yeah, exactly. And continue to watch the stock bounce around, now up about 0.9%. Again, some of the big headlines, and Scarlett, you really, draw our attention to them. Company, in terms of CapEx spending, especially amid the AI build out, sees fiscal year CapEx about $85 billion. It's $10 billion than its previous estimate when it had seen about 75. The estimate on the street was a little bit over 73 billion. And again, second quarter Google search and other revenue, that too is a beat, almost 54.2 billion. And the street was looking for 52.8. But right now we are seeing the stock down about almost 1 percentage point here.
Yeah, essentially Alphabet saying that AI is positively impacting every part of its business. And earlier I was speaking with the Goldman Sachs analyst, and he made the point that everything looks rosy for many parts of its business, from YouTube to the cloud revenue, and that's what we're seeing effectively play out in these results, with almost every part of the business beating estimates. That CapEx, though, potentially weighing on the stock.
Alphabet CEO Sundar Pichai calling this a standout quarter, robust growth across the company. Search delivered double-digit revenue growth. He said our new features like AI overviews and AI mode are performing well. We continue to see strong performance in YouTube as well as their subscriptions offering. And cloud had strong growth in revenues, backlog, and profitability. Its annual revenue run rate is now more than $50 billion. Sundar Pichai continuing saying, with this strong and growing demand for our cloud products and services, we are increasing our investment in CapEx in 2025 to approximately $85 billion and excited about the opportunity ahead.
All right, we're going to keeping an eye on shares of Alphabet down about 2% here in the after hours. Quick check on Mattel also crossing the Bloomberg terminal, and you're looking at this company resuming its 2025 guidance, sees fiscal year adjusted EPS of $1.54 to $1.66 a share, seeing fiscal year adjusted gross margin of 50%. The street was looking for 50.3, so almost in line there. And the company, in terms of the second quarter, adjusted EPS of 19 cents a share, 3 pennies better than what the street was expecting. Their adjusted gross margin coming in better, 51.2%. The estimate was 49.2%. And then second quarter net sales, too, that's coming in light, $1.02 billion. Street was looking for $1.06 billion. Street doesn't like it. Investors setting that stock down about 5.6%.
Also, we should note a correction to one of the headlines, Alphabet's cloud annual revenue run rate over $50 billion. Vonnie, I know you got your eye on some other numbers that are crossing
Las
the
Vegas
terminal right
Sands
now.
beating as well on all metrics, really, Tim. And it's interesting to see that net revenue coming in at $3.18 billion when the estimate was for $2.83 billion. That stock soaring 6% now. The adjusted earnings per share in the second quarter, 79 cents versus the estimate of 53 cents. And net revenue for Macau was $1.8 billion. The estimate there was $1.77 billion. So really, kerching for Las Vegas Sands on whole metrics.
Yeah, Macau really a star performer there for that company. I just want to go back to Alphabet for a second here because heading into this earnings report, the stock was on a 10-day winning streak up until today. It had been a laggard compared with the other Mag 7 names, over concern about how Gen AI would eat into its search business, its bread and butter business. But then people were saying, actually the economy is doing fine, so the ad business will hold up fine, and Alphabet has its work cut out for it in terms of reassuring investors over that search business, over the advertising business. Right now, you are seeing the stock move decidedly lower, at least until the earnings call begins, down about 2.5%. Perhaps, Carol, going back to that idea that the CapEx spend is higher than anticipated for the past quarter.
Yeah, I'm going to look for some color and seeing what they have to say about this, because one of the things that we talked about earlier with our Mandeep Singh of Bloomberg Intelligence is a couple of things. I mean, this is a company that has such a massive platform, and that is giving them so much data and information in terms of building out their large language models and token customization, which is something we talk about increasingly. I'm also interested in what this is doing to the tech trade overall. Just looking at the NASDAQ E-mini futures in the aftermarket, up about 0.5%. So it's not like it's pulling down the trade, at least early on.
YouTube ads revenue, $9.8 billion. That's a 13% increase year over year. The estimate was for $9.6 billion. Don't sleep on YouTube.
Don't sleep on YouTube.
No, I mean, this is like this is the competitor to Netflix.
All right. Yeah. So we're watching that. Yeah, no doubt about it. Google down, Alphabet down about 2.5%. IBM just crossing, folks. Let's throw that out for you. Second quarter revenue, it's a beat, $16.98 billion. The estimate on the street is $16.59 billion. And you're looking at second quarter free cash flow, that's coming in better than expected, $2.85 billion. The street estimate was for $2.77 billion. So, do we have the stock trade? Let's just pull it up here on my Bloomberg, and it is down about 2.7% here, Scarlett.
Yeah, the second quarter software revenue, missing analyst estimates, just under $7.4 billion. And as well, the consulting revenue of $5.31 billion, slightly higher than anticipated. But the headline here that IBM is really trying to push is that the generative AI book of business stands at over $7.5 billion. Yet another example of a legacy tech company trying to prove that it is making the transition to this AI generation.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.